We always hear about these huge markets, right? The big tech companies, the consumer brands that everyone knows.
Right.
But have you ever thought about the China oil and gas equipment service market?
Hmm.
It's absolutely massive, valued at nearly $800 billion, and guess what? It's still growing.
Wow, that's a big market.
Yeah, a scale that you might not even realize. And today, we're diving right into a company that's smack dab in the middle of this giant sector.
That's right. We are going deep, deep into Leishen Energy Holding Co., Ltd.,
Ticker symbol?
LSE.
LSE. So what's our goal here?
I think we want to paint a clear picture. What does this company actually do? How does it fit into the whole energy landscape?
Yeah.
What's their financial health like? What are the possible roadblocks and the big, exciting opportunities ahead?
Sounds good. So how are we going to do that?
Well, we're going to be looking at a recent expert analysis and kind of filtering that through the lens of value investing principles.
Love that. And what kind of resources have we got lined up for this deep dive?
Oh, we've got a pretty good mix. Everything from market research reports, which will give us the big picture, down to Leishen Energy's own filings. We've even pulled some stuff from their website.
Now, for you listening in, we get it. You want a clear, insightful look at Leishen Energy.
Yeah.
You don't want to drown in details.
No, wants that.
So our mission is to distill these sources, pull out those golden nuggets of info, and present them in a way that really makes sense.
We're like your guides through the world of Leishen Energy. And trust me, you'll want to stay with us all the way to the end. We've got a thought-provoking question about their long-term potential. It'll really make you think about their future, I guarantee it.
Let's get started. Chapter 1, Business Understanding. What exactly does Leishen Energy do?
So Leishen Energy started in 2003. They're an integrated oil and gas services company. It's really a full package, a comprehensive set of solutions for the energy world.
Okay, that makes sense. So what kind of stuff are they actually doing?
They've got 4 main areas of business. Think of them as segments.
4 segments, okay.
Yeah. First one, oil and gas equipment development and manufacturing.
So they're building the tools of the trade.
Exactly. We're talking about the essentials, stuff like reciprocating compressor sets. You need those to move gas around. It's key. And then you've got wellhead safety control systems. Super important for preventing accidents.
Right. Safety first, for sure.
Now, the second segment, technical engineering services.
So this is where their expertise really shines.
You've got it. This is all about customized design work, renting out specialized equipment, and providing essential maintenance. Oil and gas fields need this kind of support to keep running.
So it's not just about the hardware. They're providing the brains and the hands to make sure everything works as it should.
Exactly. Now, on to the third segment.
Shoot.
LNG, Clean Energy Industrial Operations. This is a really interesting one because it involves the trading and logistics of, well, liquefied natural gas, LNG, and compressed natural gas, CNG. They're positioning themselves right in the heart of the cleaner energy movement.
Okay, so that's a pretty big shift, isn't it?
It is. And finally, the fourth segment,
Lay it on me.
information automation and integration. They're all about digital solutions for the entire oil and gas value chain.
The whole shebang.
Yep, from the very beginning to the end. Upstream, midstream, downstream, you name it.
Equipment manufacturing, technical services, cleaner energy, and even digital tech. Wow, that's quite a mix. Why spread themselves so thin, though? What's the strategy behind having all these different revenue streams?
Well, think of it like this. Diversification equals stability. If one part of the market hits a rough patch, they've got other areas to potentially make up for it.
So like a safety net.
Kind of. Like, remember when oil prices went down that last time? Was their LNG trading or services segment doing better and helping them out? It's all about having options. Plus, by jumping into the clean energy game with equipment and LNG trading, they're clearly looking towards the future. It's a smart move. The energy world is changing, and they want to be part of it.
So can you give us a few examples? Like what specific products and services do they actually offer?
Oh, they've got a whole catalog. On the equipment side, besides the compressor sets and safety systems we talked about, they've got these things called flexible composite pipes. They're really popular because they're durable and cost-effective.
Right.
Now, for services, they do rentals of things like booster gas injection units. Those are crucial for getting more oil out of the ground. And of course, they offer full-on maintenance packages. On the clean energy side, they're not just trading LNG and CNG, they're also developing these distributed energy solutions. Like, imagine powering a remote area with clean energy. That's what they're working on.
Pretty cool.
And then, you've got the specialized stuff like sulfur removal devices and all sorts of fancy automation and control systems. Honestly, with this range, they could be a one-stop shop for a lot of companies in oil and gas.
Yeah, definitely. So they're not just a small-time player, are they? Where do they operate and how big is their footprint?
They've been around for almost 20 years, since
Hmm.
2003. Headquarters in Beijing, and they've already completed over 1,000 projects.
Hmm.
That's a lot of experience.
Yeah, that's impressive.
They've got a big manufacturing facility in Chengdu and offices and service centers spread out strategically. Hong Kong, Xinjiang, Sichuan, the UAE, even Canada and Kazakhstan. And get this, they're expanding globally. New plants in Abu Dhabi and Riyadh. 15 customer service offices worldwide.
So not just China anymore.
Nope, they're going global. And they just had a big export win in Indonesia. It's clear they're aiming to become an international force.
So what's their promise to their customers? What's the big selling point?
High performance, safe, and cost-effective energy solutions. That's the core. And they tailor everything to the oil and gas and chemical industries.
Really customized.
Very much so. They adapt their equipment and services to meet all the different needs and conditions you find in the field. They want to help their clients squeeze out every drop of efficiency, optimize their operations, and keep maintenance under control.
Smart.
And don't forget their focus on LNG and automation. It's all about sustainability and staying ahead of the tech curve. And you know what their motto is? Take on the challenge with integrity.
I like it.
So it sounds like they're not just focused on profits. They're aiming for a responsible approach.
Okay, so to wrap up Chapter 1. Leishen Energy is designing, manufacturing, and supplying a wide range of specialized equipment, including clean energy solutions. They offer a full suite of technical services and are active in the LNG trading market. All this, both in China and internationally.
Got it in one.
Let's move on to Chapter 2, Management Evaluation. Who's at the helm of this ship?
Okay, so leading the way, we have Mr. Honky Lee, the founder and chairman.
The OG.
He's got over 20 years of experience in this industry. His focus is on the big picture. Strategy, business planning, keeping those customers happy, and pushing for constant innovation.
Okay.
And then we've got Mr. Hongyang Lee, the CEO. He's been with the company since 2008.
Been there, done that.
He handles the day-to-day operations, oversees all that technology R&D, and he's the one steering their international expansion.
Dynamic duo.
So what have they achieved? Well, a big win for them was a successful NASDAQ IPO in December 2024.
That's a big deal.
Huge. It opened doors to international capital markets. And they've been aggressive in pushing the company into new territories. Central Asia, Southeast Asia, the Middle East. Global domination on their minds.
Sounds ambitious.
Oh, absolutely. But there's a catch. Their financials in 2024 weren't exactly stellar. Revenue dipped 5.5%, and their net income down a whopping 31.3%.
Ouch.
Yeah, it makes you wonder about their current strategies, how they're adapting to a market that's constantly changing.
So, a bit of a mixed bag so far, but what about transparency? How do they communicate with their investors?
They do have an investor relations section on their website, basic but important, and they release regular news, financials, IPO updates, major company happenings. They even have a dedicated email for investor questions. It shows they're at least trying to be open.
And their motto emphasizes integrity, right?
It does, but honesty and putting shareholders first, that needs more evidence. Especially with that financial dip, we'd need a deeper look into their corporate governance, maybe some external reviews, to really judge their ethical standing.
Okay, so to sum up, we've got seasoned leaders with a big win under their belts, the NASDAQ listing and international expansion.
Right.
But that recent financial hiccup raises some eyebrows. We need to see how they bounce back.
Agreed.
And a deeper dive into their ethics and shareholder focus is definitely needed.
For sure.
Chapter 3, Capital Allocation. How are they using their money?
Okay, so they've got a plan for reinvesting capital back into the business. Smart move. They raised about $5.5 million from the IPO.
And where's that going?
Several key areas. A high-tech manufacturing park in Nanjing, an R&D center focused on smart manufacturing and new energy, acquiring equipment and patents, and of course expanding their presence in the Southwest China oil and gas scene.
So they're really doubling down on growth and innovation.
Yeah.
What about other ways of using their money, like buying other companies or giving back to shareholders through buybacks or dividends?
Well, in 2023, they acquired Pacific Century Oil and Gas. That gave them a foothold in the Southeast Asian market.
So they're not afraid to make strategic acquisitions.
Right. As for buybacks, we don't have any info on that. And dividends. They're not paying those out yet. Not a surprise for a young, growth-hungry company fresh off an IPO.
It makes sense. They're probably pouring every penny back into growth. But are they using their money effectively? Do we have any way to measure that?
We do. Multiple sources have reported positive and pretty strong return on invested capital, ROIC.
So they're not just spending money, they're making it work for them.
Exactly. One source puts their ROIC above 30%. Their 3-year average is even higher, almost 43%. Another source has almost 19% and another around 21%. So there's some variation, but the takeaway is clear. Leishen Energy is getting a good return on their investments. That's a positive sign.
Okay, so let's summarize their capital allocation strategy. They're focused on long-term growth and innovation. They're using that IPO money wisely, and they're not afraid to make a strategic acquisition.
Right.
Plus, their high ROIC shows they're using their capital effectively, even without dividends or buybacks.
Makes sense.
Now, on to the nitty-gritty, their financial health. What are the numbers telling us?
All right, let's look at some key metrics. As of mid-March 2025, their market cap is between $87 million and $95 million. That puts them squarely in the microcap category. Their price-earnings ratio, somewhere between 10.73 and 12.33.
Got it. What about revenue?
Remember that overall decrease of 5.5% in 2024? Well, here's the interesting part. Their revenue from new energy sales actually grew by over 11% in that same period.
So not all doom and gloom. Their clean energy segment seems to be doing well. What about profitability?
In 2024, their gross profit margin was 23.2%, down a bit from the previous year's 25.1%, but still decent. Operating profit margin was around 10.93%, and net profit margin between 11.57% and 11.72%. So they're making money at each stage of their operations.
And they're not drowning in debt, are they?
Nope, their debt-to-equity ratio is super low, between 0.0283 and 0.05. That means they're not relying on debt financing, which gives them flexibility.
Always a good thing.
Absolutely. Now let's talk cash flow. Their operating cash flow was up a massive 243% in 2024 to over $15 million. Their trailing 12-month free cash flow, between $10.8 million and $14.4 million. That's the money they have left after taking care of all their expenses. It's a great indicator of their ability to grow, pay off debts, and maybe even reward those shareholders down the line.
So they're generating cash. Good sign.
Yeah, it is. And finally, their price-to-book value ratio sits between 2.18 and 2.37.
Okay, so they're profitable, they've got good margins, and their balance sheet looks healthy. Low debt, good cash flow.
It's looking good.
But what about consistency? Have their earnings been stable over a longer period?
That's tricky.
Yeah.
Our sources are mainly focused on the recent years, so we don't have enough data to really analyze their earnings consistency over, say, 5 to 10 years. And since they're not paying dividends yet, we can't evaluate that either.
Understandable for a company that just went public. What about their debt management and how efficiently they're using their working capital?
Well, their debt management seems to be top-notch. That super low debt-to-equity ratio and a high interest coverage ratio, they can easily handle those interest payments. Now, their working capital. They've improved their operating cash flow in 2024, mainly by managing their receivables and inventory better. But here's a little red flag. Their days sales outstanding is quite high, almost 139 days.
Wow, that's a long time to wait for payment.
Yeah, so they make a sale today. It takes almost 5 months to actually get the money. That could tie up their cash and make things a bit tight in the short term compared to companies with faster payment cycles.
That's definitely something to keep an eye on.
It is. But their days inventory and days payable look pretty normal. So, bit of a mixed bag there.
So they're doing well in some areas, but that DSO is a potential issue. Overall, they're profitable, strong balance sheet, good cash flow. But we need more historical data, and that high DSO is something investors should watch closely. Now, let's shift gears and talk about how the market views Leishen Energy. What's the general sentiment?
Well, since their IPO in December 2024, their stock price has been a bit jumpy.
To be expected with a newly listed company.
Exactly, especially one with a smaller market cap. After the IPO, the underwriters partially exercised their over-allotment option, which suggests there was some decent demand for the stock.
So there's interest, but it's still early days.
Right. It's a small company, newly public, so volatility is natural. Investors are still figuring them out, and the market is always changing.
And what are the analysts saying? Any price targets out there?
Surprisingly, no. We couldn't find any readily available analyst price targets for Leishen Energy. It's not that unusual for a company this size and so new to the public market. They might not be on the radar of big research firms yet. So for now, investors are on their own.
Due diligence is key.
Absolutely. Now, what's influencing the market's view? Their 2024 financials are a big factor. Strong cash flow, but remember that revenue and income decline. It's a mixed bag, and the market's reaction to that is definitely influencing their stock price and how people feel about them.
Makes sense.
And then there's the IPO itself and the over-allotment exercise. Those are big events that can shake things up.
Are people betting against them? What's the short interest like?
It's really low, actually, between 0.2% and 2.7% of their outstanding shares. So not a lot of people are betting on their stock price to go down. It suggests a neutral or slightly positive sentiment in the short term. We don't have specific data on options trading, but that could give us a better idea of how the market expects their price to move in the future.
Okay, so mixed sentiment, some early interest, no analyst coverage, and low short interest.
You got it.
Now let's talk ownership. Who's running the show?
Insider ownership is huge here. Insiders hold about 91% of the shares.
Wow, that's a lot.
It is. On the one hand, it means management and shareholders are aligned. Their wealth is tied to the company's success.
Right.
But the downside, a tiny public float, only about 1.38 million shares out there for trading. That can make the stock price jumpy and scare away big institutional investors.
So it's a double-edged sword. What about institutional ownership?
We don't have specific data on that from our sources.
Okay, so we've got highly concentrated insider ownership, a small number of publicly traded shares. How does this impact corporate governance?
With such a small public float, it's definitely concentrated. Their board has the founder and CEO, plus 3 independent directors.
Independent directors are good, right?
Generally, yes.
Yeah.
They bring an outside perspective and represent all shareholders.
Right.
But for a deeper dive into their governance, we'd need to look at their SEC filings. That's where you'll find info on board committees, how much the execs get paid, and all that juicy stuff.
Makes sense. So very high insider ownership, small public float, and a board with independent members. Now let's put it all together. Strengths, weaknesses, opportunities, threats. Time for a SWOT analysis.
All right, let's start with their strengths. Diversified business model. They've got their fingers in a lot of pies.
Right.
Long track record. They've been around for a while. Growing internationally, they're not just a China play anymore. And they're focused on the future with clean energy and digital tech. Plus, they've got a ton of patents, over 70.
That's impressive.
And financially, they're solid. Strong balance sheet, low debt, and their operating cash flow grew like crazy last year. Oh, and don't forget that high insider ownership. It's a strength and a weakness, as we discussed.
So lots to like there. But what about their weaknesses?
Well, that recent revenue and income drop is a concern. And their small size makes them more vulnerable to market swings. Plus, they don't pay dividends yet, and their days sales outstanding is a bit high. And remember, limited analyst coverage and that small public float can make things unpredictable.
So some risks to keep in mind.
Definitely. But what about the opportunities? That's where things get exciting. The China LNG market is booming, and industrial automation is growing fast. Plus, the whole world is going green, and they're in a great position to capitalize on that demand for clean energy. And don't forget their international expansion. There's a whole world out there. Plus, the Chinese government is all about supporting tech and sustainability, which works in their favor.
So despite the risks, there's potential for big growth.
Absolutely. But let's not forget the threats. Competition is fierce. They're up against state-owned giants, global players, and even tech companies trying to get a piece of the pie. Plus, the oil and gas industry is notoriously cyclical. What goes up must come down.
Yeah, it's a roller coaster ride.
And regulations are always changing, data security, environmental standards. It's a moving target. Plus, the overall oil and gas equipment market isn't growing that fast. And as a small new company, they're inherently more volatile. And of course, there's always the possibility of geopolitical issues throwing a wrench in the works.
So a mixed bag of threats.
It is what it is.
All right, we've covered a lot. Let's bring it home with a conclusion. What's the overall takeaway from our Leishen Energy deep dive?
They're a bit of a puzzle. They've got the potential for long-term growth, especially in areas like LNG and automation, and their financials are pretty solid.
Right.
But they're facing some headwinds, and being a small, newly public company comes with its own set of risks.
So a bit of a gamble.
From a value investing perspective, they're an interesting case. Understandable business model, experienced management team, and they're in sectors with a bright future.
Yeah.
But we need to keep an eye on those recent financial results. And to figure out their fair value, you really have to weigh their strengths and weaknesses, their growth potential, and understand how competitive their market really is.
So it's not a slam dunk.
Not quite. It's a nuanced situation. They've got some value investor appeal, but those recent struggles and the risks of being a microcap stock mean caution is key.
Any final advice for our listeners?
Do your homework. dig deeper, especially into their ability to get back on track with revenue growth and improve profitability.
Yeah.
Look closely at their LNG and automation segments. Those are their bread and butter for future growth. And remember, with their volatile stock and concentrated ownership, a cautious approach is best. Also, try to figure out what caused that revenue decline and get a handle on how they stack up against the competition.
Great advice. All right, we've explored Leishen Energy inside and out. Their business, their financials, their place in the market, and their future potential. Hopefully, you, our listener, have a clearer picture now. It's a complex company in a dynamic industry.
Definitely a lot to think about.
And that brings us to our final thought. Given Leishen Energy's focus on cleaner energy and automation in this incredibly competitive landscape, what do you think is the single most important factor that will determine their success in the long run?
It's a question worth pondering. There are so many moving parts.
We encourage you to keep exploring, keep asking questions, and form your own conclusions about Leishen Energy's future.
Absolutely. This is just the beginning.
If you enjoyed this deep dive, make sure to subscribe to the Stock Analytics AI YouTube channel for more insights into the world of business and finance.
And don't forget to check out the comments section. You might find some interesting stock suggestions down there.
Just remember, this is all for informational purposes only. It's not financial advice.
Right. We use research and AI tools to prepare this content, but it's up to you to make your own decisions.
Thanks for joining us, and we'll see you in the next deep dive.
See you then.